All right. So let's dive right in, to this deep dive all about investor relations, whether you're getting ready for some big meeting or, looking into investment or just curious about the finance side of business. We're going to unpack some interesting things from this document you gave us. It's called Pasted Text. Get ready to see like earnings calls and, those stock prices in a whole new way. You might think investor relations kind of sounds, well, a little dry. But trust me, it's way more interesting than it sounds. It's all about, relationships and reputation and, yeah, even a little bit of storytelling. So let's just start with like the basics.
Mm.
What is investor relations or IR?
You can think of IR as the bridge, between a company and the investors. It's all about, building trust
Yeah.
and being transparent, making sure that everybody's on the same page. It's not just numbers. It's, communication, understanding, and making sure that all those relationships are like solid.
And that matters to you more than you think. Whether you're an individual investor trying to, make those smart decisions, or you're part of a company that needs to communicate well, or even if you're just trying to like figure out those financial headlines, understanding IR can really change the game. Okay, so it's like the secret language of finance. Now let's get into like the details.
Hmm.
What do these IR wizards actually do all day?
Well, they wear a lot of hats. Think about like, master communicator from actual storyteller and like a relationship guru all in one. They need to be able to explain, complex stuff in a way that makes sense, manage expectations, and kind of, navigate the waters of investor sentiment, which can be choppy sometimes.
That sounds like a high wire act. So break it down for us. What are some of those key functions?
Well, one of the most important is communication, of course. And it's not just talking at investors. It's a two-way street. IR pros need to explain, the company's story to investors for sure. But they also need to like capture, how investors are feeling and then relay that, back to the company. It's all about, keeping everyone informed and like aligned.
Makes sense. No one wants to be left out of the loop, especially when you're talking about money. What about, the numbers side of things, the financial reports and all that?
Yes, the financial reporting. That's like a core function of IR.
Yeah.
They take those, dense earnings reports, all the numbers and charts, and they turn it into something that people can actually understand, something investors can use to make decisions. Think of them as like financial translators,
Hmm.
making the complex stuff clear.
So it's not just, crunching the numbers. It's like finding the story behind them.
Exactly. And then telling that story in a way that, engages investors and builds confidence.
Okay, so we've got communication and we've got financial reporting. What else?
Well, there's shareholder relations. That's a whole art form in itself. Think about it. You've got, all these different kinds of investors out there, from like giant institutions to, individual people like you, and they all have different needs and expectations.
So how do they keep everyone happy?
It's a balancing act.
Yeah.
They handle inquiries and, address concerns and make sure that everyone feels like they're heard and valued. They're like the liaisons between the company and the shareholders, keeping those relationships strong.
And sometimes things don't go as planned. What happens when a company hits a rough patch? Like maybe a bad quarter or some like unexpected news.
That's where crisis communication comes in, when things go sideways.
Yeah.
IR professionals are the ones in the hot seat. They have to, manage the message and try to calm the waters and, maintain that trust with investors, which is so important. It's high pressure. But a good IR team can really, make all the difference in how a company handles, a difficult situation.
So they're like the PR first responders, making sure everyone stays, calm and informed when things get a little shaky.
Okay, I'm starting to see how important this is. Now, what about the companies themselves? What makes for like a really great investor relations team, the kind that investors really trust and appreciate?
The source material highlights a few like best practices. One of the most important is transparency. It's about giving, clear and honest information, being upfront about the good and the bad.
So no hiding behind smoke and mirrors. Investors can spot that a mile away.
Exactly. Transparency builds trust. And that's crucial, especially when things get tough. Another important practice is consistency.
What does that mean in IR?
It means, making sure that your message is clear, your strategy is understood, and you're delivering on what you promise. No sudden changes in direction, no, conflicting information. Consistency builds confidence, both with investors and with the market as a whole.
So it's like building a good reputation, showing that you can be relied on no matter what the market throws at you.
Exactly. And then there's engagement. Engagement, that sounds a little touchy-feely for, finance.
It might sound that way, but it's really important. It's about, actively reaching out to investors, responding to their questions, listening to their concerns, and making them feel like they're part of the conversation.
So it's not just about, sending out information. It's about actually building those relationships and making investors feel heard.
That's right. Investors want to know that the company values their input, not just their money.
Makes sense. Now, what about compliance? I'm guessing there are a lot of rules and regulations.
You bet. Compliance is critical. IR teams need to, stay on top of all those regulations and make sure that their communications are, squeaky clean, no cutting corners, no playing fast and loose with the rules.
So they're like the referees, making sure everyone's playing fair.
That's a good analogy. And finally, there's clarity in financial reporting.
We talked about that earlier, but I think it's worth emphasizing.
Absolutely. Those financial reports need to be clear, concise, and easy to understand, even for someone who's not a financial expert. It's about presenting the numbers in a way that, tells a story, highlighting the key takeaways, and making sure that investors can see the big picture.
Okay, so we've talked about the what and the how of IR. Now let's get into the language. Those key metrics that investors use to understand, a company's financial health. Think of it like this. You wouldn't go on a first date without some basic information about the person, right? Well, the same goes for investing. You need to understand the language, the metrics, to make informed decisions. Let's start with something you've probably heard a lot, the PE ratio. What's the deal with that? And why should investors care?
So the PE ratio, or price to earnings ratio, it's basically like a way to measure how much investors are willing to pay for each dollar of a company's earnings. It kind of gives you a sense of if a stock is overvalued or undervalued.
So a high PE ratio, that means investors are excited about the company's future. They're willing to pay like a premium for those earnings.
That's one way to look at it. But here's where it gets interesting. A high PE ratio doesn't always mean that a stock is overvalued. It could also mean that investors have these high expectations for the company's growth. Right. Especially in fast-growing sectors, like tech. They're betting on those future earnings, even if, the current earnings are kind of low.
So it's not just as simple as high PE is bad. You need to look at the context, the industry, and the company's growth potential.
Exactly. The PE ratio, it's a good starting point.
Yeah.
But it's just one piece of the puzzle.
Oh.
Now, what about earnings per share?
Okay. Earnings per share, or EPS. That sounds pretty straightforward. It's like how much profit the company made for each share of stock.
Yeah, you got it.
Yeah.
EPS is like a basic profitability metric. But even with that, there are some things to consider. Like a high EPS, it might look good on paper. But you have to think about things like debt and cash flow and how it compares to other companies in the same industry.
So you can't just look at EPS on its own. You have to see the bigger picture.
Precisely. It's all about context. Now let's talk about something that investors love. Dividends.
Ah, dividends. That sweet passive income. Tell us more.
The key metric here is dividend yield. It tells you what percentage return you'd get just from those dividend payments based on the current stock price.
So if I want a steady stream of income, I'd look for a company with a high dividend yield.
That's a good place to start. But remember, not all companies pay dividends. Some companies decide to reinvest their profits, back into the business to grow. And even companies that do pay dividends, they can, change how much they pay out. So it's important to look for consistency over time.
Got it. Dividends are nice, but you got to make sure they're reliable. What about return on equity? What is that?
Return on equity, or ROE, it basically tells you how well a company's management is using the shareholders' money to make profits. It's a measure of, efficiency and profitability.
So a high ROE means the company is, using its resources well to make money for investors.
Exactly. It's a good sign that management is doing a good job. But, like with any metric, it's not the whole story. You always want to dig deeper and understand what's really driving that ROE.
Okay, now let's talk about something that can make investors a little nervous. Debt. Every company has some, right? But how do we know if it's a healthy amount or, a red flag?
Well, that's where the debt-to-equity ratio comes in. It compares a company's total debt to, its shareholder equity. So it gives you an idea of how much they're relying on borrowed money.
So a high debt-to-equity ratio, that could be a bad sign, like the company is in too much debt and might struggle if things go south.
That's a possibility. While some debt can be strategic, using it to finance growth or expansion, too much debt can put a strain on, the company's finances, especially when times are tough economically.
Makes sense. Now, what about market capitalization? I hear that term all the time, but I don't really get it.
Market cap, or market capitalization, it's really just the total market value of a company's shares. Basically, it tells you how big the company is in the market.
So a large cap company has a big market cap, and a small cap company is well smaller.
Exactly. It's a quick way to see, a company's overall size and how important they are in the market.
Okay, and finally, let's talk about stock price performance. That's probably the one everyone pays the most attention to.
It definitely gets a lot of attention. Stock price performance just means, how a company's stock price has changed over time. It shows, investor sentiment, how the market is doing, and of course, how the company is performing.
So IR teams are watching that stock ticker really closely, trying to figure out what those price movements are telling them about, what investors are thinking.
Absolutely. Things like, stock price movements and trading volume and what analysts are saying.
Hmm.
It gives IR professionals a lot of information about how the market sees the company and its future.
It's like the market's report card for the company. Okay, we've covered a lot here, from the functions of IR to those key financial metrics. But I have a feeling there's more to it. It seems like investor relations is a much bigger part of a company's overall strategy.
You're absolutely right. IR isn't just about, you know, sending out press releases and doing earnings calls. It's really connected to a company's growth and reputation and its ability to achieve its long-term goals.
Let's unpack that. How does IR fit into, the bigger picture of corporate strategy? We've explored, a lot about investor relations from like, the core functions to those key metrics that investors use to check out a company. And we've seen how IR can be like a really important part of a company's growth, their valuation and their reputation overall. But before we wrap up, this whole deep dive, I want to leave you with something to kind of think about. We've talked about the good stuff about investor relations, how it can, attract capital and boost stock prices and build trust and all that. But what about the other side of that? What about the responsibilities that companies have to their investors?
That's a good question. It really gets to the heart of, ethical and sustainable business.
So it's not just about investors protecting themselves, it's also about how companies should act.
Exactly. Companies, they have a responsibility to be transparent and honest and fair when they're dealing with investors. They need to give accurate information, and do it on time, even when the news isn't so good.
So no sweeping bad news under the rug and hoping nobody notices.
Right. Transparency builds trust. And that trust is like the foundation of a good relationship between a company and its investors.
So what else does ethical IR look like?
Well, it's about being upfront about risks and challenges,
Yes.
not just talking about the good stuff. It's about really engaging with investors, you know, listening to what they're worried about and taking their feedback seriously.
So it's like a two-way street. Investors do their homework, but companies need to be open and, responsive.
Right. It's a partnership
Yeah.
built on respect and a commitment to, working towards the same goals. And when that trust is broken, it can cause a lot of damage, not just for the company, but for the whole market.
We've seen that happen, right?
Yeah.
With companies that mislead investors or hide information or even commit fraud, the consequences can be really bad.
Absolutely. It makes investors nervous, and it can hurt the whole financial system. Ethical behavior, it's not just the right thing to do. It's also really important for success in the long run.
So as we wrap up this deep dive, what's the main takeaway for our listeners?
Whether you're an individual investor or a financial pro or just someone who's trying to understand the business world, remember that investor relations, it's more than just numbers and presentations. It's about relationships and trust
Hmm.
and the responsibility that companies have to the people who invest in them.
And as you navigate the financial world, keep those principles in mind. Look for companies that are transparent and honest and, genuinely engage with their investors. Ask the hard questions, do your research, and remember that knowledge is power. The more you know about investor relations, the better you'll be able to make good decisions and, protect yourself. Thanks for joining us on this deep dive into investor relations. We hope you found it, insightful and maybe even a little inspiring. Until next time, keep exploring, keep learning, and keep asking those questions.